Good afternoon, ladies and gentlemen, and thank you for joining me for the next episode of the Admiral Markets Trading Spotlight webinar series. It's great to have you all here with us for today's session. And today we'll be talking in particular about when to use a psychological stop loss. I appreciate that we have a broad range of experience in the room. Some people here with us will know and utilize psychological stop losses. Those who are really new to trading, this might be a completely new topic or just a new view on how to use stop losses. It'd be fantastic if, for those of you joining us here today, if you could just drop it in the chat box there if you understand what a psychological stop loss is. If you use them for yourself in your own trading, it'd be fantastic to get that viewpoint from yourselves. And we will be able to cover and talk about these for the next about 40 minutes in our particular session. If you're watching this on the Facebook channel or on our Admiral Markets YouTube channel, then please, if you like the session, please, be sure to give us a like, subscribe, and if you have any particular questions or comments, please put them in. We really always enjoy the interaction, and maybe you have ideas for future sessions that you'd like us to cover in the Trading Spotlight webinar series, and we'd be delighted to hear them from you. But today, it's all about when to use a psychological stop loss. So what am I going to talk about today? Well, not unsurprising, I'm going to talk about what actually a psychological stop loss is and what role does it play in our trading. And then I'm going to talk about the different types of psychological stop losses. And then I'll be able to talk about, my own personal experience of using psychological stop losses and also my experiences of working with traders over the years to give you really an understanding of, how they become important to us and actually how they can impact our trading and why it really is superbly important for you to be aware of them and make use of them in your own trading business. We'll also touch upon about how to use them as an early warning system, and that I appreciate for new traders might be a little bit of a confusing topic, but hopefully by the end of today's session you'll be much more understanding of what that actually means. And we'll talk about how to return to trading once they've played out and you're ready to sort of re-engage with your trading business. So there's a fair amount for us to cover today. Lots of sort of interaction with yourselves, hopefully, because as we discuss and talk about them, please feel free to share your own personal experiences. I think it helps everybody just to sort of see that we're not that unique. Okay, we may all sit in different parts of the world trading different instruments, but ultimately we're all humans. Okay, we all have our own experiences, and people can actually sort of help each other. People can actually learn from each other, and I think that's a fantastic additional benefit from the Trading Spotlight webinar series. As always, if you're looking for more support after this webinar and really throughout the trading week, then I urge you to join the exclusive Trading Spotlight community on tradersyard.com. I'll be in there for the rest of the afternoon, and this gives you an opportunity to sort of see what how myself and also my colleagues Marcus and Jens, how they view the market and what they're actually focusing on. My colleagues Marcus and Jens, they put in some fantastic pieces on their own intraday trading, so I urge you to join us in the Trading Spotlight community. You can see it there, tradersyard.com/group/312, and I'm sure my system will happily put the link in the chat box. And as I say, you're very welcome to join us there. For those of you who don't know me, well, my name's Paul Walsh. I've traded for many years, okay, including trading for hedge funds and for high net worth clients, and that gives me a broad range of experience to talk about the importance of psychological stop losses, and primarily for my own trading, and a sort of a dominant trend trader for my swinging position, and then a mean reversion trader for my intraday trading. And as you can see there, Admiral Markets are a comprehensive multi-instrument broker that have true global expertise with the sort of local support. You can see that they are regulated in various entities across the globe, providing very competitive spreads and allowing you to engage with markets using both MT4 and MT5. And if you have any questions, please get in touch with your account representative, and they'll be very happy to help you with that. But today, it's all about psychological stop losses. So, you know, it's a case of, I suppose, an interesting question for you. Does any of the people here joining us, do you actually understand what a psychological stop loss there? So Peter's joining us. Hello, Peter. Peter said he's not heard of a psychological stop loss before. Well, by the end of this session, you will be well aware of them, Peter. I assure you, to you and the rest of the group. But maybe some of you are aware of them. Maybe some of you actually utilize them already in your own trading. Certainly here at Admiral Markets and as part of the Trading Spotlight webinar series, we have consistently been going on about the importance of using physical stop losses with your trades, ensuring that you basically ensure that you put in a stop loss with your every single trade that you take in the markets. A physical stop loss on your trade prevents you from doing major damage to your trading account, and that is supremely important, okay? And it's also possible that you require a stop loss for your entire trading business. And what do I mean by that? Well, it's just that there are times when you'd actually probably achieve more by not actually trading, which might sound a little bit strange for here as Admiral Markets to say that there are times in your trading career that actually you'd achieve more by not trading. But, you know, we here at Admiral Markets believe that we're here to educate you across the broad range of topics and subjects required to help you evolve and develop as a trader. And this is where psychological stop losses come into play, and what we're going to talk about for the remainder of our session. So very often when traders come to see me, you know, invariably they've seen me because they've had a bit of a challenge, okay? They've had a little bit of a challenging period. They've maybe, you know, not been achieving the kind of success that they want. And actually what they're looking for is, you know, traders are looking for revolution. They want to just throw everything away. They want to just throw, you know, everything off the table, okay? They just want to completely start afresh with a new sheet of paper. And that can be, you know, sometimes that will be, you know, a useful way to operate. But for the most part, I realized for working with private traders for many years is that actually it's more about evolution rather than revolution. It's about sort of being able to take a snapshot of where you are today as a trader and about actually working out, well, you know, what have been the good parts of your trading endeavors, what have been the parts that just need some areas of development, you know, and what are the parts of trading that actually you need to ditch because they hinder you more than help you, that they don't actually serve you. And that's actually more of a loop that everybody talks to about that kind of evolution as a trader, and every single trader is going through an evolution to their next level as a trader, including myself, you know, including myself. If anybody ever tells you that they, you know, have actually got trading completely and totally under control and that they actually know everything there is to know about trading, then my suggestion would be not to listen to them, because all traders are constantly learning, all traders are constantly evolving, okay, as we take a longer journey towards trading mastery. But very often one of the challenges that, you know, private traders have is that one of their biggest challenges is that, as it says there, they can't see the wood for the trees. Because when you're engaged in trading, okay, you're engrossed in it, okay. Trading is, you know, it's a fascinating topic, it's a fascinating subject, and it can actually sort of, you know, completely absorb you, which in itself is a topic for another webinar about ensuring that trading is benefits your life and doesn't take over your life. It's about ensuring that you are trading to live rather than live to trading. But, you know, private traders, as I say, sometimes they struggle, okay? They can't see the wood for the trees because they are so closely engaged, or they don't actually know what they don't know. They are still having an area of evolving to a level of self-awareness as a trader to understand, you know, that invariably the way they trade is actually affected quite often by other significant elements that are going on outside of your actual trading. We like to think, especially men, we like to think that we sort of just sit there and we trade in a silo, that actually whatever else is going on in our lives has absolutely no direct impact upon their trading results. But what you'll find is any good trader, any professional trader, anyone who's traded for a good while will realize that this is absolutely, absolute cobblers, as we would say in the UK. It's a load of rubbish, right? And that invariably we don't trade in a silo. And then invariably lots of things that are going on in our everyday life can have an impact upon our trading performance. And actually part of that evolution towards trading mastery as a trader is about becoming self-aware of recognizing when these external factors or these external elements have an impact upon our own trading performance. Because if we are available or we're aware of that, then sometimes that helps us just to be able to take a step aside from trading, because actually it's more important for us to deal with the issues that are going on with our lives rather than trying to actually just trade our way through it. And I will talk and share some rather, they might be declared as horror stories, but I shared them with you from knowing from other traders, so it in orderly gives you a little bit of an understanding of how important recognizing this, having this level of self-awareness about recognizing you're on an evolution as a trader and seeing some of the elements that will have an impact upon your own trading performance. But the truth of the matter is that, as we've talked about, in terms of having physical stop losses, ensuring that you have an order in your trade that actually takes you out when your trading idea no longer has merit, or the actual trading idea has failed. The truth is, you should also have a psychological stop loss, because simply put, there are times in your trading career that you should not be trading at all. To do so opens you up to the possibility of severe damage physically, mentally, emotionally, and financially. And it's at these moments that great traders utilize a psychological stop loss on their entire trading business. And we're going to discuss them in particular detail. When you're a new trader, you're excited, okay? Trading it's exciting, it's fascinating. As I said before, it draws you in, you want to engage in it, you love it, you found something that absolutely captivates you. But that can actually be detrimental to you, because what invariably happens, as I said a few moments ago, is people think that they can just trade in a silo and that what goes on in the rest of their life has no impact upon their trading performance. And I assure you, ladies and gentlemen, that it does. I can absolutely, positively 100%, okay, confirm that it does. And I can talk about that from my own personal experiences. I can talk about that from having worked with hundreds and thousands of clients over the years. So let's have a little chat about them and let's discuss them. They might actually seem like common sense, but as I have found over the years, just because it's common sense doesn't mean that people often follow it. So it's important for you to understand and see these, because when you recognize these elements, it's important that you do the right thing in order to help your trading business evolve, okay, to the levels of success that you undoubtedly deserve for your efforts. So, as I said, very often I talk about common sense exits, namely that when certain events happen in your life, that you should actually just put down your mouse, okay? Step away from the computer or your tablet, okay, or off your phone, and actually step away and don't actually trade. Two of these major common sense exits are if there is a birth in your particular family, or if there is a death. And the first one, okay, a birth, if you're a trader and you're starting a new family, it's a fantastic and absolutely amazing time in your life. And you should be able to try and do all you can to actually enjoy that fantastic experience. However, and I say very often this, from my experience of dealing with male traders, invariably, having the birth of a new child in the family, invariably it means that fathers feel that they have to step up, that they have additional responsibility and commitments, and that actually they feel that now they have to overtrade because they actually want to sort of try and make the best possible life for them and their family and their new child. And so actually what happens is that pressure drives new traders to overtrade, and invariably, despite their best intentions, they actually trade poorly, because not only are they putting themselves under pressure to invariably to do well, but equally invariably that they're probably quite tired, they're probably shattered, because new baby coming into the family could invariably sort of just it will change up complete schedules and change your life instantly, forever. And so it's important that, you get an opportunity to enjoy that experience. So, if there is a new birth coming, or that there is a baby arriving in your in your life in the next few months or so, it's important that you actually plan for this. Okay, plan for it. And if that means you have to step away from trading, okay, or you have to change your trading schedule completely for those first 3, 6, 9 months, maybe even a year, if that's what you have to do, then invariably that is important that you do that. You want that, the birth of that child to be a wonderful, fantastic experience, not to be something that is actually tarnished by some trading issues because of over trading, because of tiredness and additional responsibilities and commitments. Equally, on the flip side of this, ladies and gentlemen, is that invariably if you have a death in your family, whether it be your immediate family or whether it be a sort of close friends or associates, that too is equally a good time to invariably step away from trading for a short while. I can talk about this from my own personal experience here, is that last March, I lost my best friend of about 27 years in a very sudden way. And actually what I did was, I didn't trade for about 8 weeks afterwards, because I knew that I was dealing with grief. I knew that I was dealing with personal grief. I had to come to terms with what happened, and I knew that if I would trade the way I felt at that time, that actually I would want vengeance. Okay, I would want vengeance for such a senseless act, the loss of my friend and leaving his wife and 4 children, and I would take that out on the market. I would go looking for the vengeance in financial markets, and I know that would never end well. And so I put myself under a psychological stop loss for 2 months. Whilst I looked at markets and did analysis, I didn't take any trades for 2 months until I knew within myself that actually I felt in a space where I could actually return to trading and be able to trade from a good space. Okay, I had processed the sort of the feelings, okay, the pain of that particular experience. I can also talk about, particular examples of, when I've done consultancy for hedge funds and where they have had similar experiences where one of their traders has had a particular death in the family. And one example in particular, the trader in particular, he insisted on trading through the loss of his grandfather, who was enormously important to him. And that trader then subsequently, over about the next 2 to 3 months, lost 35% of the entire trading fund. Not just his fund, the entire trading fund, because he was suffering grief, and he took that out on his trading, okay, and his trading decisions. So do yourself a favor, ladies and gentlemen. If there's a birth in your family, or if there's a passing in your family, enact a psychological stop loss. Use the common sense exit. Put the mouse down. Step away from your trading until such time that you feel that you have processed those particular events and are in a position to return to the market. I guarantee that you'll thank me for doing so. Another particular common sense exit, which is linked to either a divorce or perhaps a separation. Okay, that is, you would think, as I say, it should be a common sense that if you're undergoing the stress and pressure, perhaps there is, as I say, a family divorce going on, that invariably that, it would be common sense not to try and trade through that, what is an emotionally traumatic time. But invariably what we find is that, we want validation, or we want distraction from sometimes the pain that's going on in our, let's say, everyday life, and think that the trading markets will provide us with that. And yes, it will provide you with distraction, but I can assure you that it will probably be not a very good, certainly not a very profitable distraction. So if you're going through a divorce, or if you're going through a separation, then once again, enact that psychological stop loss. Step away from the trading computer and actually take time out. Focus on ensuring that divorce separation is completed as amicably and as best as these things ever can be, and that you yourself as a trader has processed all of the feelings and emotions, go through with it. And there are different ways to do that. For some people that can actually be engaging in therapy, and if that's what works for you, then that's absolutely fine. For other people, it could be that invariably they have to sit down and just journal away, okay, just ensuring that they actually sort of almost drag out all of those emotions from. Other people might do that. They might want to go and run up mountains for a week, okay? And I've had clients myself who have done that because that's the way that they look to sort of process such particular issues. There are very many different tactics that you can use to help yourself process, these events as they go through your lives, which happen to all of us. They happen to all of us. But the important thing is that it shouldn't become something that has an impact upon your trading. And I appreciate that new traders have said, they're excited, they're captivated by markets. But I'll tell you this, markets were here long before I was born. Markets will be here long after I am gone. Okay, markets will be here, and if you have to take some time out for one day, 1 week, 1 month, 1 quarter, 1 year, okay, even longer, if that's what needs to happen, then that is okay. Okay, that is okay. You're running a trading business here. Okay, that's you need to make good, smart business decisions, and sometimes you just need to know when to enact a common sense exit. The next could be when invariably either you're moving house, okay, or you're moving office. So I believe moving house is somewhere down about sort of number 3 in terms of people's sort of traumatic life events. So, if it is a traumatic life event, okay, it's a period of change in your lives, okay, and when you have periods of change, well, then invariably it's going to trigger certain kind of emotional responses. So, when that's happening, don't try and trade, okay? Don't be trying to trade, okay, in the back of the removal van on your tablet, okay? Just close down your trading businesses for whatever it needs. If it needs a couple of days, a couple of weeks, a couple of months, okay? Do what needs to be done. Focus on ensuring that, whether it's a house move or an office move, make sure that is done to the best of your abilities. And then, and only then, once you're settled, then get ready to sort of re-engage with financial markets. As I said, these things might sound very common sense, but you'd be surprised at how often people ignore good common sense. What we're hoping to do is by talking through these issues on this particular session is that it helps you raise your self-awareness about how these events will impact upon your trading. And the fact that, you're forewarned is forearmed, okay? And the more you understand and see this, the better position you are in to make better choices going forward in your own trading business. One of the other common sense exits, or when a psychological stop loss should be employed, is when you are genuinely feeling as if you're actually burnt out. For some people, how that manifests itself will be can be very, very different. Some people might just be sluggish. Some people just might be unmotivated. One thing I find a common theme, okay, both in myself and in other traders that I've worked with over the years, is that when traders stop keeping good records of their trades, that in itself is just it's like an early warning sign. Okay, it's like an early warning sign that they're starting to get a little bit burnt out, and that actually it might be time for a break. Now, what we find is that because trading just generally involves you being sat here in front of your computers, people just honestly think, well, Paul, this doesn't burn me out. I'm just spending a few hours every day sat at my computer screens making choices. I'm not burnt out. I can assure you, ladies and gentlemen, okay, that invariably you will burn out, and you will burn out faster than you think you do, especially if you're engaged in intraday trading. Trust me, I've done intraday trading for hedge funds, and I can assure you it burns you out much, much faster than you think, and you have to manage that, okay? And the way you manage that will actually help you engage in your trading better over the longer term. But if you're starting to feel burnt out, if you're starting to do things like, you're starting to not keep records of your trades, or you are following your trading plan, but it's almost like it's passive. It's almost like you're automatically just going through the motions. That is a sign that you're burnt out, ladies and gentlemen. And what I can implore you to do is to take a break, okay? Throughout all of the work that I have done with traders over the years, it's about prevention is better than cure. Take your break early. Take your break now. Some people that might be just a couple of days away. For other people, you might want to take 1-2 weeks away, okay? And that's fine. You will know what's best for you. But I assure you, Prevention is better than cure. So if you're starting to feel burnt out, if you're starting to get behind on your admin, if you're starting just to not be bothered to sort of keep your trading records, okay, if you feel as if you're just going through the motions, those are all signs that you're burnt out as a trader, and take a break. All right, prevention is better than cure. And one of the other periods is to take a stop loss is when you're on holiday or when you're traveling for business. So, you know, we have, you know, we see here on the trading industry that invariably we see lots of marketing images there of how you know, fantastic lives with internet connectivity and devices that we can actually sit and trade from anywhere we want in the world, okay? And you can actually sit by the pool or sit by the beach, okay, sit away trading. And I will admit, you know, I have, you know, I've sat on the beaches of Seychelles, okay, a couple of times. I used to go there quite a lot and sat there and traded from the beaches of the Seychelles. I can assure you, ladies and gentlemen, it is, it's not as great as you think it is, okay? It is, yeah, it's not as brilliant as you think it is, okay? It's not exactly the way you should be operating. Kind of linking on to the previous comment we just talked about in terms of being burnt out, you know, what I'm a great fan of is, you know, we like to all think we're fantastic at multitasking, okay, as humans. We like to think that we can do 3 or 4 things all at the one time. The reality is, for the most part, we're normally pretty rubbish at multitasking. I find it's better to do one thing and one thing well. So if you're going on holiday, especially if you're going on holiday because you feel burnt out, go on holiday, okay? Switch off the computer. Leave it away, okay? Don't. In fact, I'd even go so far as to suggest that you go further way and actually have a complete digital detox, which is what I do when I go away on a break on a holiday. Literally, once I let people know where I am and that I'm safe, then invariably the phones, the devices, everything gets switched off, put into the safe in the hotel, and then I don't read papers, I don't read trading stuff, I don't look at the markets, I have nothing. I completely have a period of just complete detox from digital life, from trading, okay? Go away on your holiday, enjoy your holiday, all right? When on holiday, be on holiday, enjoy it. And, you know, and might say, well, you know, Paul, this is clearly common sense you're telling us, and it is common sense, but, you know, knowing it's common sense and following it, I find is very, very different for a lot of traders, okay? Just because you have the ability to trade whilst you're sat on the beach doesn't actually mean that you should do. So when you're on holiday, go away. And the same works for, you know, when you're traveling for business. So I have, you know, I know that I have about 3 weeks every quarter where I will be traveling, okay, sort of for business to see my clients. And when that happens, okay, when I'm traveling for business, I don't trade at all, okay? I don't open positions. I might have a couple of longer term positions that might be running, that might be in profit, and I will manage as I'm traveling. But I'm not trading as a traveler, okay? I'm not sat in an airport lounge trying to trade on the community Wi-Fi, okay, on my tablet, all right? I'm not doing any of that because, once again, as I said, you know, we like to think we can all do multitask things, but invariably I find with trading that, you know, when I sit down to trade, I sit down to trade. And when I move off to travel or to go on holiday or to coach or to gym, sport, whatever, do one thing well at a time, okay? And I find that that's what actually works. That's what works best for me. And so, yeah, as I said, if you're traveling for business, okay, yeah, fine. You know, if you're sat in a hotel room on your own, okay, and you've got a couple of hours to kill, well, do you know what? Maybe doing a little bit of work on your trading business, a little bit of education, perhaps maybe some analysis, perhaps maybe just reading some good trading material, perhaps watching some of our Trading Spotlight webinar series to educate yourself. That might be absolutely fine. But don't try and trade when you're, you know, when you're actually sort of traveling. You're going to be, you know, you won't be in the right frame of mind. Okay, you'll probably be a bit hassled. You're probably maybe a bit bored. Probably needing a distraction. And invariably, all of those things sort of play their part in making sure that you're not making the best of trading decisions. So, as we said there are certain times when you are nowhere near 100%. So just to remind you, occasions like if there is a significant person dies in your family or friends, when a child is born, if you're going through something like divorce or separation, when you're moving home or moving office, or if you're feeling psychologically exhausted or burnt out. when you're on vacation or when you're on a business trip and cannot follow the markets. These are perfect times to have a psychological stop loss, to have a common sense exit, okay, to step away from your trading. As I said earlier, markets were here before you were born. Markets will still be here after you're gone, okay? If you miss the markets for a couple of days, couple of weeks, couple of months, a quarter, a year, because of the life events going on in your own particular life, that's absolutely fine, ladies and gentlemen, okay? It is absolutely fine. And I implore you to actually sort of take that on board and build it into your trading plan. If you don't have a trading plan, well, you know, there are some fantastic webinars provided by my colleagues, Marcus and Jens, which talk specifically about various elements of trading plans. And within your trading plan, there should be a piece on psychological stop losses. It could just be a little bit of paragraph of talking about things that invariably will make you step away from the market. Maybe actually having listened to this or seen this, maybe some of you watching it might be thinking, well, there might actually even be additional elements, okay, or additional events that are important to you that actually sort of, you know, or stressful to you that actually you would add to your psychological stop losses. So I once worked with a client many, many years ago, and for her, birthdays were very, very stressful, okay? She had birthdays for her family, for her kids. She found them very, very stressful. So that as part of her trading plan, for a couple of days either side of significant birthdays in her family, well then actually she would have a psychological stop loss. She wouldn't be trading, she wouldn't try to trade, she would focus on the birthday, get it run, and then actually come back to markets afterwards. So as I say, there might be, you know, we're providing a list here, but actually there might be one or two elements that are important to you, and that's absolutely fine. That's absolutely fine. I challenge you as always just to sit down and take a few moments to think about, well, you know, what areas are important to me, okay? What particular things do you realize actually maybe trigger you? Perhaps maybe you have you're very, very closely aligned with a sporting team, okay? And then invariably, you know, when they lose, that actually is not a particularly good time for you, and actually it's not a great time for you to be trading financial markets. So, you know, there are lots of different variations, there are lots of additions, okay? It's about knowing who you are and about recognizing what's important to you. So here's the problem with psychological stop losses, ladies and gentlemen. You know, you've listened to this webinar and you've probably nodded your head at the sort of sage advice of it. And yet, ladies and gentlemen, you'll probably still go out and do it anyway, okay? You'll probably still go out and not put a psychological stop loss. And you'll probably think, well, that is great advice, Paul, but it doesn't apply to me. All right? Oh, it doesn't apply to me. That applies to everybody else. Oh, I don't, you know, this is great advice for everybody else, but not for me, Paul. I'm better. I'm different, okay? I'm unique. And I'm just here to tell you, ladies and gentlemen, that sadly you're not, all right? As I said, prevention is better than cure. Prevention is always better than cure. So just be aware of what your ego is telling you, okay? That it knows what's best for you, right? And as I said there, in managing yourself as a trader, prevention is always better than cure. We always think that when there's great advice like this given out, that it actually applies to everybody else, but not to ourselves. We always think we're the unique. We always think, well, yeah, we don't need to do that. That's great advice for everybody else, Paul, but, you know, I'm the exception to the rule. I'm unique. I'm special. And you're not, okay? You're just a human, just like me, okay? Just like, you know, the other 7 billion people here in this world, okay? And we know we all have our strengths, we all have our weaknesses, okay? We all have our heuristics, we all have our biases. So just beware of your ego telling you that it knows what's best for you. And as I said, prevention is always better than cure. And I know I've said it about half a dozen times during this webinar. It's because it is important, all right? It is that important. And, you know, and I want you to succeed. I want you to do really well in your own particular trading endeavors. And, you know, if you won't listen to me, all right, well then, you know, listen to a true market wizard, okay? Here's Paul Tudor Jones, my own kind of professional hero in trading. He's in the Jack Schwager's book on market wizards. And here's a quote from him that says, macro trading requires a high degree of skill, focus, and repetition. Life events such as birth, divorce, death of a loved one, and other emotional highs and lows are obstacles to success in this specific field of finance. And I would sort of just broaden that out to trading, just full stop. It doesn't matter whether you're a macro trader, whether you're an intraday trader, okay? Life events such as birth, divorce, death of a loved one, and other emotional highs and lows are obstacles to success in this specific field of finance. So if you don't want to listen to me, please listen to Paul Tudor Jones. Okay, he is a market wizard. Okay, so it's and he clearly lives by that. All right, and actually I know he does. I know he does live by that. So take it on board, ladies and gentlemen. All right, okay. Don't just say, "Oh, that's great advice for everybody else." Paul, take it on board. Take a little bit of time. Just add a paragraph or two in your own trading plan to ensure that you just make sure you have your psychological stop losses covered off. So in conclusion, ladies and gentlemen, as well as physical stop losses, we're also advised to have psychological stop losses. Think of them as common sense exits from trading. There are times in your life that you should not be trading. You should be flat, okay? Remember, traders, being flat is a position in the market. And sometimes private traders forget that. Sometimes private traders forget that the most profitable thing you can do as a trader is to be flat. It is in your best interest to respect them, okay? Respect the market, respect your capital, respect those life events that are occurring. Sadly, most people only learn after the experience. That's why I said, prevention is better than cure. Good traders build psychological stop losses into their trading plan. If you haven't done it, take a bit of time, okay? It won't take long, okay? It'll take you 10 minutes to just add a paragraph or two to your trading plan just to ensure that you cover psychological stop losses. And I guarantee you'll be happy that you did, okay? You'll be happy that you did. So, as always, please come and join us in the Trading Spotlight community. If you're there around this afternoon and want to ask me questions about psychological stop losses or your experiences of it, then please, I'll be very, very happy to discuss that with you. As you said, you can see there, tradersyard.com/group/312. And as I said, my colleagues Marcus and Jens put up some excellent sort of posts there every couple of hours as well. And as always, don't forget to join us next time when my colleague Mark is going to teach you about how to become a successful Forex trader in terms of what does success mean to you, how trading can help you achieve your life goals as well as your financial goals, and how to create a plan to get from where you are now to your vision of success. And that will be on Wednesday, February the 12th at 2 p.m. London time. And you can check your emails for a link or check out on the Admiral Markets website. And as always, you'll find lots of analysis and education and resources on the admiralmarkets.com website. As always, you can contact us, you can email us hello@admiralmarkets.com, YouTube channel /Admiral Markets, Facebook.com/Admiral Markets Global. If you're watching this on demand at a later time and date, then please feel free to to like and comment and subscribe. If maybe you've got some of your own experiences where you wish you had placed a psychological stop loss, okay? It'd be great to hear from your own experiences there, ladies and gentlemen, because sometimes even just by sharing your own experience, that can help other traders, and it's quite cathartic to be able to share that. So there you go, ladies. I hope that's provided you with some food for thought. I hope that's given you something to take away and to consider. As I said, lots of people, will have listened to that and think, oh yes, it's all common sense. I know this, but invariably will also think that it doesn't apply to them until they do it, and then it actually goes terribly wrong for them. Here we are, okay, we're trying to help you, okay, we want to help you, we want you to have the best opportunity to evolve to your next level as a trader, and we want you to be aware of there are times and places when you need to have a psychological stop loss in place, and that can actually be the very best thing to help you in your progress as a trader. If there's any particular questions, I'll happily take them. Otherwise, I wish you the very best of success in your own trading journey, ladies and gentlemen. And I look forward to speaking to you in the near future. Many thanks.